I don't move my stop loss back. Once I trim the risk, this is one of the rules that you want to have going forward in your trading as well. You don't want to be doing a lack of a stop loss. You see a lot of folks out there that this is the number one reason why most people won't show you their live executions, the trade management, because they're either not using a stop loss or they're doing it poorly. Most of the time, they're not using a stop loss. And that to me communicates a lack of understanding what they're doing. Chances are they're probably risking too much. And the bottom line is they don't know where to place a stop loss. I have no problem being stopped out. I have no problem getting the trade wrong. But I do have a problem with opening up my stop once I trim it. So if the stop has been reduced as the trade moves in my direction, I may be trailing that stop loss up closer to pair the total risk that would be open at the time of the entry before making the stop loss become either break even or locking in something for profit. Either or, once I move it, it never gets taken the other direction. Like I don't take it, move it up 5 handles and say, oh, well, it might get my stop. Let me drop it down 3 from the 5 I just moved it, or whatever. I commit myself to that. And that has helped me over the years frame a better understanding about where I want to move my stop. And it makes it more disciplined for me to adhere to a rule-based idea about not opening up risk once I've trimmed it down. If you're zoomed in, okay, and this is going to go in the same thought process of the management of a stop loss, okay? When you're zooming in on your charts, and this is what I see a lot of the students, I don't know if they're trying to make sure they have a specific candle in the photograph or the screenshots, but they're zoomed in so close, you can't really measure what's going on. So when I'm looking at my charts, I have a lot more data showing, and I think that's the number one reason why folks they get disoriented from what I'm showing. They think that everything that I have in the screen is pertinent to the very setup that I'm trying to engage in. And that's not the case. You should not be ever making financial decisions in your trading with applications on your phone. Like moving a stop loss management position while you're on the go. Yeah, okay, yeah, it's fine. But doing analysis on your phone and trading from your phone, yeah, that's a recipe for disaster because you're looking through such a small lens and not really taking in enough information. So that's the reason why I have as much data on my charts when I'm showing you my examples. I want you to understand where we are within the price run, where we are in the previous dealing range. So it helps you understand why I'm not in a rush to raise my stop loss up. I'm more concerned about watching where price is going than that of protecting the fact that I might get stopped out and have a losing trade. Now, that's number one rule always, preservation of capital, but clout and saving face publicly is the number one rule for most people on social media today. They don't want to do anything that might be viewing them outwardly from outside perspective, other ones that we be looking at you or them could be very judgmental. And that is many more times costly and expensive and painful than that of a losing trade that you would have done in the privacy of your own trading without making your results public. And there are lots of folks right now that are wrestling right now because they want to stand out. They want to shake their sword and stand up and rabble rouse. And they're hanging around in break even or in drawdown with only one quote unquote profitable day for the entire month so far. And they're the loudest to talk. And they'll tell you that you're not going to hear sound good advice here. when I execute on the sound good advice that I teach. How can you fully trust what you're seeing on the next few candles is going to be something that is limiting your trade or putting a cap on it prematurely because you're so zoomed in? You're losing sight of something that would be a longer term objective. Now, I learned that lesson very painfully and costly, losing trades that were winners, holding on to really good trades too long because I had my charts zoomed in too tight. And over years and years and years of just saying, I got to take a step back from this and seeing the charts better than I do now. Well, not better than I do now, but better than I did then. I see it now better because I allow for more information. And also, and I mentioned this several times in my discussions and lectures, and even on Twitter Spaces. Periodically, when you're in a trade, especially if you feel like you're second guessing it, like if you're in a trade, it's moved, and you just don't know for sure it's going to keep running, step away from your chart. Put your laptop maybe on a coffee table or dining room table. Take a little bit of a distance between you and it and look at it further away. Put more data on the chart and then kind of get a feel for where you are at that moment. Many times it'll give you a different perspective, and you'll see, if you understand how to read price action, you'll see that what you're fearful of because you're so zoomed in and you're watching that 1 or 5 minute chart and it's fluctuating around a lot because it's zoomed in and it's causing your brain to pump out this adrenaline and or up to the point of releasing cortisol, which is a stressful hormone. When you're in trades, whether they're profitable or losing, you're pumping chemicals constantly into your bloodstream. And if you are not used to that incurred risk while trading, it can cause you to be, number one, emotional, psychologically amped up, and you're going to make something that is very insignificant paramount. It's going to be a huge thing when it isn't. And typically, for those that want to use a stop loss correctly, we're not concerned about ramming up the stop real quick to lock in anything, because we're allowing the market to move around and gyrate. And you watched the trade this morning that I had a very specific fair value gap that I did not want to see come back into, and I certainly didn't want to see it close that fair value gap. So when my stop was trailed up, it was trailed up to the bottom of the fair value gap that I did not want to see fill in. My annotation in the fair value gap was, it must remain unfilled. For me to trust it, typically on Fridays, there will be it'll be a return back into the weekly range. So what's the weekly range been this week? Down. So it's going to do what? Likely retrace up into that weekly range, 20 to 30, maybe 40% of the range. So whenever I see a Friday slam down after a bearish week, my mind immediately jumps to, okay, we've already hit so many discount arrays, in other words, targets on the low end. It's reasonable to expect this as manipulation. So that drop down at 930 on E-mini S&P, that to me signaled, okay, we're done. But I didn't want to go in there and try to catch a falling knife. And you watched me do that yesterday. That was altogether something different. This could be me reading it as it's a Judas swing, it's Friday, it might retrace back into the weekly range. And if I try to go in there and try to buy the low, and it could just keep dropping. So I required a little bit more. I need to see it get back above the 9 o'clock low. And I need to see it create a fair value gap. And you watched that form. I drew it out. It was retracing back down into that before the 10 o'clock hour. So I accumulated multiple positions using the fair value gap. Stop loss was not rushed up. But once it starts approaching a second target, my second target for the day was 39.40 and 3/4. That level is an old high. We were looking for obviously the public to be arm wrestling smart money. Smart money is going to pressure on Friday the street money. Now, street money sees what all week long? The market's been going down. It's going down. It's going down. In their mindset, they're thinking, okay, it's been going down. Nobody wants to miss out on the move going over the weekend because it's probably going to be lower on Monday. So let's get short. So there's an arm wrestling match from a sentiment perspective. You have the informed money, street money, against those individuals that are just trying to catch up. They missed the move, so therefore they must do what? Do what everything and everyone has done to be profitable for the week, which was be net short. And when everybody dropped the market real quick and sudden, just like that, going into the open, CNBC, Bloomberg, everybody's going to be chattering, oh, futures are down. Looks like it's going to be a ugly morning. What does that tell the retail trader? They better get short. The market's going down. Get ready for it. I, on the other hand, am expecting TGIF. Thank God it's Friday, okay? What that means is this is a little quirky expression for the likelihood of a retracement back into the weekly range. So the weekly range is being majority lower. So it's going to do what? Retrace back up into that range a little bit. 20 to 30%, as much as 40% of the weekly range. Now, you probably heard this term, low resistance liquidity run. That's what I teach my students. That's what I like to trade in, those environments where it's just really, really easy to get in, get the stop placed. It quickly runs to your profit objectives and partials. And usually the trade's over like pretty quick. High resistance liquidity runs have much more deeper retracements. They tend to consolidate a lot. They chop around, then move a little bit, go to a new level, then consolidate and chop and then move again. That is a high resistance liquidity. It doesn't mean, obviously, you can see I can find profitability in that. But I try to steer my students when they're first learning away from these market conditions. Look at the daily chart, the weekly chart, the 4 hour, the 1 hour, the 15-minute time frame. Don't just look at the example I'm showing with that 1 minute chart and think, well, that's all there is to it. You're ignoring the opportunity for you to discover much more about why I was doing it. Because it's not only on a 1 minute chart. The 1 minute chart is just allowing me the medium or time frame to engage in. It's not just the 1 minute chart. Partials profit. Okay, I don't understand the argument. If you get stopped out, that's a partial of your equity that you just lost. I mean, think, folks, think. No, I don't want to take any profits. That doesn't make any sense to me to take something out and pay myself for all the time and effort and energy and attention I've placed on this engagement here. No, I don't want to do that. It's all or nothing. To me, that doesn't make any sense. That makes absolute zero sense to me. Are you going to work Monday, Tuesday, Wednesday, Thursday, and then say, okay, I got a flat tire. I can't make it to work on time. I'm tied up. Can't get to work. I got to call out on Friday. And then, hey, boss, listen, I couldn't do Friday. Just keep everything I put in. Just let me go home with nothing. That's what trading. That's exactly what trading is without taking partials when you're given the opportunity to be paid. That's the equivalent of that. Does that make any sense? That's asinine. You are going to struggle when you first start learning how to do this. So it is advantageous for you to know where you're trying to take profits. So that way you know what it feels like. You get accustomed to doing it over and over again. But you have to have a target, a goal, something. Because here's what you don't realize. You might have a good edge. You might have a good role. You might be dialed in and your attention to detail is keyed up. You know exactly what you're doing. And you've been consistent for a day, a week, a month, a couple months. And you get this feeling like you're King Kong and you can't do anything wrong. Then you get into that trade that's going to come. And you're going to hold on to it. And it's going to build up a lot of unrealized equity. That means on paper, unrealized potential. If you close a trade, you would get that, but you're not going to because partials are stupid. That's what you've been telling yourself, and you don't want to subscribe to that. And I have watched my own trades. I've watched my students' trades, and I've watched people that don't trade anything like me get real close to their objectives. And I listened, and I observed, and I watched them arm wrestle the public because people with more insight than them, more experience than them, simply said, why don't you just take something off here? You just take something off. That's trade management. That's risk management. And it's also emotional management. You have to manage the person that's pushing the buttons. And money, fear of losing, fear of judgment publicly. And I want you to understand that you're going to do it wrong. And because you don't know for certain. You don't know for certain it's going to move where you want it to. Where everybody that would just simply watch the first couple of videos of my 2022 mentorship and think they got it all figured out and they don't have to watch anything else. I'm going to tell you the folks that took shortcuts where they're going to see the fair value gap, the shift in market structure, and they're going to try to go short. And I'm telling you in the chart, that's not it. Because you didn't watch the entire thing. You didn't back test. You didn't read price. You didn't study. You didn't do any of those things. If you're going to wrestle with these markets, you don't invite yourself to be wrestling emotionally and psychologically while you're in the trades. So if you feel that tug of war that's affecting your focus, if you're physically talking about it, if you do those types of things, if you make any kind of physical, audible response to whatever the market's doing, that's the surest sign that you need to take something off. You have to do that. If you don't do that, you're literally putting yourself through the ringer for no reason. Because you don't know if your target's going to get hit, just like mine wasn't hit today. I had two partials that came off, and I had the largest portion of the trade in the book. My stops were rolled. If it came back, I told you I didn't care. $9,100, but wrong. Say that again. $9,100, and I was wrong. How many times can you afford to be wrong if you don't pay yourself? I literally was telling myself vocally, I said, it needs to go here. And as soon as I did that, that was it. That was my cue. So I do exactly what I'm telling you to do. If I'm going to make a physical response audibly or with my body, I'm disturbed. I'm trying to get more comfortable because this is making me uncomfortable. It's not doing what I want it to do. It's not bending to my will. So now I'm becoming what? I'm arm wrestling it. So if I start arm wrestling the market and I have something on the trade where I can peel something off, 5 contracts, 2 contracts. What if you only have 2 contracts? Would you still take one off? Yes. I could have opened that stop up. And guess what that does? That makes me a hypocrite. That means I don't practice what I teach when I practice what I teach. Do you have it in you to admit when you're wrong? Can you admit when you're wrong? Because you need that skill set in this industry. Now, think about this for a moment. If you've traded with live money, this is not the same as when you're trading with a demo or paper trading, you're trying to learn how to do it. If you ever traded with live funds, you're going to have this experience. Once you do it, at least a few times, you'll have this happen to you. You'll put a trade on. You'll feel good about it, or maybe you won't feel good about it. You'll just be impulsive and put the trade on because you have time and you just want to see something happen and feel like the lottery win. But you'll put the trade on and it won't move in your favor right away. And it starts drifting down. And you know in your mind's eye that if it goes to this level, you don't want to be in that trade. But your stop loss, if you've adopted one, is maybe very close to that level that's really uncomfortable for you if it gets to that point. So in reality, that should have been your stop loss where you're uncomfortable, because you don't know if the market's going to drop down there and snap into that level and go through it. So wherever that pain threshold is for you in the trade, that's where your stop loss is. But how do you manage that? Fear. Don't over leverage, but use that same stop. Because what you're doing is you're saying, I'm fundamentally wrong as a human being, because if it goes here, it's probably going to keep going. And my idea about it going higher is incorrect. And that's uncomfortable. That's worse than a stop out, because it's pride. Pride takes more than a losing trade takes in funds. It lasts longer. The pain's worse. The drawdown doesn't come back that fast from a losing series of trades because of the ego. The pride is the issue of being right, to be perceived by your peers or onlookers, detractors, supporters, whatever you want to call it, an audience, whoever you invite to watch your trade, to make it harder than it has to be. But if you're here to be a student and you want to learn how to do it correctly, you have to identify where you're wrong and admit that, okay, I'm wrong here. That's wisdom. That's wisdom. But you look at it as, that's a weakness. I should have known better. Who says? Who says that you should have known better? You don't know what that market's going to do. You don't know if it's going to run to your target. I don't know. That's why I have to use a stop loss. If I knew for certain, I wouldn't even bother moving my stop loss. I wouldn't use a stop loss, and I wouldn't take my partials, would I? I never really thought about that. Hello. In high resistance liquidity run signatures, I am very, very, very disciplined about taking partials. If I'm in a low resistance liquidity run signature, I can run them for a full pool. I have a lot of things that I feel confident, and I'll let the full stop out happen in that case and not have to worry about getting any partial. I know I'm on side. That doesn't mean I know with 100% assurity that I'm correct. It just means that I, as the trade manager, managing the person, the risk, the emotions, the money, all those factors being equal, I'm comfortable with not taking partials in a move that's low resistance liquidity. It means it's going to move like a hot knife through butter. Nothing's going to really slow it down. But high resistance liquidity run signatures, you have to be mindful that they can many times come back and swipe stop losses much more frequently than a low resistance liquidity run signature. Those price runs, they don't have a whole lot of returns back for stops. They're quickly trying to run to an objective above or below the marketplace, which is the reason why I teach my students to look for those. They're very rewarding. They are quick to give you that instant gratification, and it's exhilarating. You feel like, wow, man, that thing delivered like nobody's business. Man, how fast that thing happened. That felt awesome. And you want to go right back in and do it again when you're new. You think it's going to be something just like that next. And it's not like that. There's small little surgical precision elements that leads to that. But high resistance liquidity runs, they will still go, but they go in these stair stepping type thing. It'll go up a little bit, consolidate, drop down, reaccumulate, go up a little bit slowly, go to a new high, consolidate, drop down, run stops. Consolidate, rally up again, consolidate, drop down to an inefficiency, rally again a little bit, and then go down once more to take out stops after the inefficiency formed. That's what makes a high resistance liquidity run very frustrating. When you are in a trade and you feel high strung, when you feel like you want to turn your live stream off because you know your trade's about to shit the bed and you're going to lose more, number one, you need to stop, take some time off. Two, you're over leveraging. And three, you need to reassess what you're doing because you are fighting real institutional order flow and you don't know it. Liquidity, inefficiencies, time of day, market structure, simple stuff that may not seem simple to you right now. But if you're in trades and you feel that tendency to want to wig out and you're uncomfortable, you're squirming, you got to get up, you're walking away from the charts, you're pacing around. Let me tell you what I used to do. When I'd be in trades, usually it was the bond market because when it would move, it would move nice and quick. And every tick was over $30, $31.25. So just a tick is almost what a full mini in E-mini S&P is today with one contract. And this bond market would move around a lot. And if you got 16 ticks, you know, you're making what 10 contracts on a mini move of one contract would deliver, or lose that per contract. So I'd be in the trade, I put the trade on, it's not moving for me. You know, I got 11 ticks. I could bank something here, but I'm like, no, I need it to go 16 ticks. That's what I wanted my trade to be. I took this trade and I am not going to be able to move the stop loss because I was too new. I didn't know what I was doing. So I kept the stop loss exactly where it was because I was thinking, I don't want to be wrong. I don't want to get stopped out and not get my $500. What's wrong there? Number one, I'm assuming I'm right. And that's always a bad thing. Two, I'm not appreciating the fact that the stop loss is there to protect me, not a institute of pain and suffering. It's to protect you from excessive pain and suffering. That's what it's paid to do. When you put that stop loss in there and you pay the transaction cost and commissions and fees for that executed order, you paid it to do its job, which is to what? Keep the amount of money and suffering at a minimum. Whatever that order would execute at, that's what you pay it to do. Once you place the order, you don't worry about that. It's doing its job. If you are going to worry about it, then don't use the stop loss and try to time it if it goes down there, because that's the equivalent of what you're doing. So why waste any time doing that? Put the trade in there and then focus on what matters most. Is the trade continuously giving you signs and signatures in price action that it's going where you want it to go? It's not giving you the broken wing tactic. You know, it's running out of steam. It doesn't have energy anymore. You know, you've been in trades where you just know that this damn thing is not going where you want it to go. But what happens? What happens? You don't take anything off. You don't close the trade and say, okay, I'm not going to waste any more emotional and psychological equity on this trade. If you're holding on to something and it's just driving you nuts, your infancy in this or your obsessiveness, which I know a whole lot about, will prevent you from closing the trade and walking away. And knowing, here's the common sense that everybody ignores. The market's going to trade next week. It's going to have a morning session. It's going to have a PM session. It's going to have liquidity runs. It's going to have a run to inefficiencies. It's going to be all kinds of repeating things that you somehow get amnesia about. And you let the trade go into drawdown. You move your stop or take it off. Instead of taking something off when you had profit and easing that pain and growing through that pain like a child in growing pains, but that growing pain of going through this, you compensate for that pain by taking some of the trade off and fund yourself. Take it off. Reduce the measure of risk that you're going to hold on to. And be diligent about making sure that if you start feeling that, don't let it go to your full stop. Don't let it go to your full stop. It's simple. If you open the trade up and you're going to take a mistake of 2 full percent, as soon as you start squirming, take the trade-offs that way. Whatever you have, it can't take more than 1% away from you. And if you've taken something off in partials, it can't even be a full 1% then. So what happens when you're wrong? Yeah, it was a mosquito bite. It's not pleasant. It's going to itch you over the weekend. You're going to think about, oh, it didn't work out for me. Going to keep going back to it, scratching it and scratching it. If you keep doing it, it's going to get infected. It's going to hold you up from doing something new and exciting and more profitable. But you have to let go of these things and identify these times where you're getting uncomfortable. You're vocalizing your frustrations. You're breathing. It shows that you're physically uncomfortable. You're agitated. You're fidgeting. I fidget with a deck of cards every time I'm trading. You can't hear it, but I have a deck of cards. I'm either doing shuffling, I'm doing one-handed cuts, I'm riffling through them. I'm doing that while I'm waiting for the setup to come. Because in my mind, I'm that sports car in neutral, the gas pedal to the floor. I'm ready to go. Just look at me. Look how many times I can get into something. Boom, 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 shotgun blast. I'm buying everything or selling everything that could have been used for entry. I could do a whole lot more entries, but I don't want to be too much for all of you. You don't grow if you hold on to the trade and take nothing off and remove the stop or move the stop larger. When you start trading with real money, you're going to discover something about yourself. This is the thing that hurts most people. It's usually the men. You're going to put the trade on. It's going to offer a little bit of profit. And then you're going to feel that struggling. It ain't moving. It's not moving for you. And you start worrying about what? It's going to go for my stop. You're worrying about it going to your stop instead of saying, is it showing signs that it wants to continuously moving in my favor? But no, you're not doing that. You're focusing on it's moving to my stop. You're telling yourself it's going to your stop. You're thinking it's going to your stop. But you're not doing shit about taking any of the risk off. You've abandoned the idea of studying whether or not it's giving you clues that it's going to keep moving in your direction. You totally forgot about that. Now you're arm wrestling the market like you're somehow going to be able to control it with telekinesis. You staring at the chart, you cussing at the chart, you throwing shit that you're throwing shit all around the room. You think that that's going to have something to do with how the market, like the market's going to say, oh shit, he just threw his glasses. Oh shit, he just threw his Ray-Ban glasses against the wall. Man, I better not go for this guy's stop. You think that's what's going on? You think that's what's going on? You think that anything you act out and go crazy, that's going to have an influence on what the market's going to do. Now, clearly, right now, we're talking outside the marketplace, and you're laughing. You're probably thinking to yourself, it's true. It's true. I've been there. Maybe not throwing your Ray-Bans, but you've done something to that effect. Resisting the obvious. What you should have done is take something off or collapse the trade and just be out of the pain. You don't want to stay in those positions of uncertainty, pain, discomfort, because what you're doing is fortifying the exact reasons why you're going to be scared shitless taking the next trades when they're good. The trade doesn't love you. It's okay. There's other ones out there that will. So you have to do what? Kill it. Not murder, but you have to kill the transaction. Just be done with it. And save your mental equity, your emotional equity, that psychological tug of war. You have to know when that's there. And as soon as you feel, and I felt it today in the market, it was not giving me what I wanted to see. And I was communicating in my text in the annotation so that it needs to go here. It needs to go right now. And it just started fluttering. It's okay. I got 5 contracts on. Let me take one of them off. Do I feel any less anxiety about whether or not this is going to pan out? Not that I was freaking out, but I'm communicating the way you're going to feel it. When you have real money, whether it be your funded account, trading a demo account, because that's what they all are, or with your own money, you're going to feel this eventually. And the way you manage it, the way you press through it, is you take something off. You reduce the risk, and if there's profits, you bank some of it. And you do it again if it doesn't feel like you've overcome it. And that's what I did. I did it once, twice, 3 times. I said, okay, I'm just going to take it down. We'll take one contract and see if it can run to my target. I don't care at this point. And then being stopped out, $9,187. Wrong. I did the right thing. No regrets. That's why I typed it out. I was communicating exactly how I teach you all. I did not get what I wanted in the final piece, but I anchored with a bullet point so my subconscious remembers I did everything right. No regrets. I got stopped out with no regrets. I do this. I live this. And I teach it so that way you do the same things. You can never get to this level of precision in trade management unless you do the thing I'm teaching you to do. And that's just the bottom line. It's just the way it is. Use a stop loss because you're going to get stopped out. And you want to keep the risk limited. You have to know when that market is signifying that, hey, I should be running for you right now. And you know it should be. But it's not. And you have profit. And I know deep down inside that this trade is not going to pan out for me. I know it's not. But what if it does after I get out? I have lived that moment so many times as a 20-year-old. Listen, these are the things I've mentioned many times in the boring discussions that you need to listen to. You're going to encounter that. It's uncomfortable. It sucks. You have to admit you're wrong. And even if you close a trade and then it runs in your favor, you would have. Well, listen, it just cost me $850 at the grocery store this afternoon. All the woulda and the shoulda and the coulda ain't going to pay the $850 grocery bill that I had to pay at the grocery store. It doesn't, you can't do shit with that. Woulda, coulda, shoulda is nothing. That's all. That's worse than paper trading. It's something that you didn't even do anything about. You weren't in there. You can't realize anything from that but regret. And you're doing that instead of saying, I was right to manage my emotions, disconnect myself psychologically from the marketplace, and the result of one transaction, I removed that emphasis and power over me as the human being, that wrestling match, that gladiator war. You're in the Coliseum. You're doing battle. You think you're doing it with the market. You're doing it with yourself. You're flogging yourself. You're literally beating yourself needlessly. Professionals, consistently profitable students, traders, money managers, they know pain thresholds. They know themselves. That's how they get there. They don't try to hide it. They don't wear blinders. They don't blame somebody else or something else. They own it. And when they feel these triggers, these uncomfortable things that trading will bring and present to you, and how you react, how you justify your actions or the lack thereof, is going to be an uncomfortable, well, endeavor for all of you. You don't know who you are yet. You think you do. You will unravel yourself, plain and simple, because you want perfect rose petal pathways where you don't have to worry about ever stumping your toe, no paper cuts for you, no drawdown, and the market owes you something. It's looking out for you. When in fact, none of that's true. And then when you finally come to grips with the first stages of seeing that is the case, where the market is not easy, the market is trying to chew you up and spit you out. It's not an invitation for you to go in and get rich. When you discover that and you're in a trade and you know damn well that you need to get out of it, you're going to do what human beings do. The opposite of what should be done. Don't walk on the grass. ICT's moonwalking across it. It's human nature. Tell me I can't do something, I'm going to do it. We're designed to be what we are. And we have to work our whole lives becoming better. And I have not obtained perfection yet. And none of you listening have arrived there either. But in trading, I know where my thresholds are, where I know that the egotistical, pompous 20-year-old boy that thought he owned the world, I know that feeling, that little itch inside that says, okay, it shouldn't be doing this. It should not be doing that. So there's your warning sign. So what are you going to do? You got one more opportunity, and I put a time filter in. I say, okay, this candle or the next one, it's got to start delivering. And if it doesn't give it to me, or if it breaks a PD array, like in other words, think about it like this. If I have a fair value gap that I have my stop beneath and I'm long, I am trusting that that fair value gap is the catch-all. It's the thing that's buffering me from being stopped out, and I'm trusting it. Preferably, I have one or two more PD arrays, whether it be a volume imbalance, a bullish order block, above that fair value gap. If I lose two of those PD arrays and it goes into that fair value gap, that's a warning sign for me, because it just caved in 3 levels of what I would deem a support. Things that from a order flow idea, it would not go down there if it was bullish, where my stop is. This is what happens when you get in this market. It shows you your ugly side. And as nice as some of you people are, I'm sure you were very, very pleasant. It will show you the monster that's in you. That ugly person. The one that you like to pretend doesn't exist. Every one of us have it. Every single person has it. And you have to master that person. You're never, ever mastering the market. I'm never going to master the market. I'm never going to be a master of the market. You know I am a master of? Me. I might go off the rails, get chemically imbalanced for a few minutes or so, cuss and rant and rave, and then it subsides and I go the other direction again. But I master me. I can't trade in a state of mania. I have to physically walk away. I can't even look at the charts, because in my mind, I'm in that Russell Crowe gladiator shit. Like, I'm in there. I'm going to kill everybody. I'm going to lay waste to everybody. And I'm going to have a bloodlust in there. And I might do something and not feel the pain that I would feel if I was more focused, like I felt today. I seen what I was doing, and my expectation in the marketplace was not panning out. It was stalling, stalling, and stalling. And I watched it take out several PD arrays that, in my opinion, were warning signs. So that's why I said, okay, if it starts stalling again and it's not delivering when I want it to deliver, the time filter starts. It's like a little clock. You know, it's this candle or the next. So it's 2 minutes. 2 minutes. If it doesn't start moving for me in my favor, I'm peeling something off. And then when I take the trade lower in terms of my risk, if I had 5 contracts on or whatever it is, but at that time today, I had 5 remaining on, I took one of them off. I didn't feel at ease about it. So I took another one off. Felt no change in it. Took one more off. I said, that's it. If I'm going to take 3 off, I'm just going to take it all the way down to 1. Leave 1 on and then see what happens. And then it went down and stopped me out. Who cares? At that point, I've done the right thing. I did the right thing. I listened to my analyst, that smarter part of me that tells me what I should and shouldn't do. I allowed the trader, that is inner circle trader, to listen to the analyst, which is Michael. Michael is the person that has the shit figured out. ICT is the one out there that wants to be Russell Crowe and slay everybody. Ratchet ICT, which is who you hear on here, I got to keep him at bay, because when I get manic, That's the guy that will put me in drawdown, then I got to work to fix that. Is it doing what I'm expecting it to do? If it's not, then what's it doing? Telling me I got to lighten the load on my position. But you're supposed to only take partials when it's moving in your favor. That's what you're aiming to do. Are you going to argue and say that taking something off to manage the emotion, the psychological position that you're wrestling with? I can't make the market go up, no matter how mad or uncomfortable or impatient I become. You can't either. But when you get caught up in that moment, it feels like that's the right thing to be worrying about. And what you're doing is you're trying any way to distract yourself from the discomfort of what you're going through at that moment. That's what's really going on. That's the very thing, that piercing pain of frustration and anxiety and impatience. You're trying to distract yourself because you know what you should do and you won't. When I see times when there cannot be any hesitation, no hesitation whatsoever, you have to just know that this is the right thing to do. You have to know yourself. You have to know what you're going to be thinking, how you're going to react. And young man, I'm telling you, those are not the moments where you want to pony up and cowboy up. As soon as you feel that discomfort, the tendency to think irrationally about it, your breath increases in its rate of inhale and exhale. You're starting to hyperventilate slowly. You don't realize it yet, but you feel it. You're looking around, your palms are sweating, you're irritable, you're hoping that nobody around you says anything to you. I'm telling you, when you feel uncomfortable and it starts physically manifesting in you, you get out of the trade through partials or entirely. There is no shame in that. There is absolutely nothing wrong with that. That's how you coach yourself through growing pains. And it's also how you keep your account solvent. Because you will lose control of yourself unless you control yourself. The broker's not going to do it for you. Watching my videos, me talking to you right now, it's not going to do it for you. Better for you to learn on one market. You must control yourself here. No one can help you with that. It's something that you do individually. You own it. And it's uncomfortable when you find out that you aren't as strong in the areas that you were expecting it to be. I'm going to know how to do this, and I'm going to pick the right trades. I'm going to pick the right order blocks, the right fair value gaps. I'm going to have no fear getting in the trade. Great. That's a good start. Now, once you get in there and it doesn't move for you, the real learning starts. How do you know when to hold on to the trade? It is astonishing to me that folks don't ask how to overcome these moments. It's like they block it out. Like they know it exists in their own trading. And then by asking that, they feel like that's a weakness. They'll ask, how do you pick the right order block? How do you know when the fair value gap stays open? How do you know when market structure is really not a stop hunt? See, most of my students will ask questions like that because it's not something that's pointed. It doesn't take anything out of them or require a blood offering. Something that you had to go through in terms of uncomfortable misery, discomfort. It's like you know it's there, but you don't want to bring it up. That uncomfortable, I should get out of the trade. I don't know what to do. Let me move my stop. Let me take my stop off. Holding on to a loser. You know, the folks that are here listening, you know you've had that. And it's uncomfortable hearing about it. You're like, man, can you get off this subject? It reminds me of an ex. I can't vibe with you when you're doing this. This ain't a vibe. This is growth. This is learning how to be impeccable with risk management, knowing yourself. Because all the entry techniques are useless. It's shit if you don't know how to manage yourself. If you can't recognize when the market is no longer likely to deliver where you need it to deliver, and it's more likely to hit your stop loss, you need to know what you're going to do. And it needs to be consistent every single time. You don't think about it. It's just a matter of when you touch something hot and it burns, what do? You retract your hand real quick, boom. Your brain is telling your arm, get your finger away from that hot ass shit right now. You don't even think about it. Your brain just says, there it is. It's second nature. In trading, as soon as you pick up that you're in a position that now is not high probability, and you're spending a whole lot of emotion, a whole lot of psychological equity, you're worrying about it. Whereas when you put a trade on, in the beginning, I'm not saying you won't have these feelings and these concerns about whether or not you're going to be right or wrong, because that's normal. But eventually, when you know what your model is and you get experience doing it, you're not going to be afraid to push the button. You're not going to be afraid to put your stop loss there. But when you get into those positions where it feels like it's probably not going to pan out for you, the worst thing that you could be doing, the worst thing, is showing people that you're in that trade. And then it materializes. It's usually the guys that'll send me something. They got a trade on, it's already in profit. They have their stop loss, but they just put on because it wasn't on the whole time they had the trade open. You think I don't see that shit? I'm in there. I'm in the room with you. I know what you're doing. Okay. And you're just right before your limit order is taken or would have been taken. And then it's uncanny. It's uncanny how immediately that 1 minute chart starts consolidating and pulling back into a fair value gap that you don't expect. And now you're feeling it. You're thinking, shit, why did I just send that tweet to ICT? Man, I'm flipping out here. I should have hit my target by now. He's watching me. Everybody else is watching me. The trolls are going to troll me now. What are you doing? You're not managing your trade. You're not managing your trade. And you're making your trade, my trade, Twitter's trade, and the trolls trade. And guess what? We're all winning. We're in a free trade. When you lose, it costs us nothing. When you win, it doesn't mean anything to us. We're neutral. We don't care one way or the other. Delta neutral. We don't have any. We don't care. But now you do more than you did before you sent that tweet. You do not open your stop up to take on more risk. If you've limited it by moving it up or down in deference to your trade, you stick with it. You've done the job as the trader. The analyst in you said, trim the risk. You executed on it. You rolled the stop. You took partials. Now the analyst is queuing up and saying, hey, watch this. This is an area where it should be moving. Pay attention to it, because if it doesn't, you need to start taking the risk off or bail. That's the internal dialogue I'm having. Leaning on experience. I mean, I'm not hearing a voice say do this, but it's just, I'm trying to personify it for you so you understand the dialogue between how I lean on my own experience that serves me well and how I encounter that with opposition and price action. In trading, I don't want to be trading every day. Like I want it to be where I don't have a condition like I had today. I can find profitability just about in any day, but it doesn't mean I won't encounter a stop out or losing trade here and there if I force myself to trade every single day. If I say I'm going to go in today and take a trade, I'm going to trade the morning session, I'm going to trade the afternoon session, I'm going to do it every single day, invariably, I'm going to have a series of losing trades sprinkled across the month. It doesn't mean I'm drawing down to 90% drawdown. Okay. It's not a team sport. There are no heroes. I'm not a hero. You're going to have struggling points in your learning. And the best thing you can do is expect them. Expect them in these instances and know how to deal with them early on. I didn't learn this from a book. I've read Mark Douglas's book. I've read all kinds of other trade psychology books and things that mention certain things. And like I mentioned before, Alexander Elder's book Trading for a Living, the first half of that book, before he even starts talking about charts, that whole business about wrestling with oneself and everything that he talks about in that first half of that book, that is worth more than Mark Douglas's book, because it talks about real root issues as humans. Whereas Mark Douglas will talk about trade related things. No. You got to get to the core root cause of things. But I want you to do well. I do want to see you do well. And I want you to understand that some of these problems that creep in, which are normal, they're opportunities for you to be excellent as a trader. Know exactly why you're doing something. Not, should I, shouldn't I? I'm afraid to make a decision. When it has to do with money, you're never wrong cutting the risk entirely. There's no shame in that. People that are making money aren't running around trolling other people about not making money, when the better thing for you to learn is how to manage yourself. You're constantly in this state of chasing something when you're supposed to be spending the time this year diving into yourself. I did not understand how much of a impediment I was to my own success early on. I all the time looked at outward excuses. I blamed my first wife that she left me. I used that guilt. Oh, no wonder I couldn't make any money. She left me, and I'm distracted by that. That's bullshit. That was bullshit, because every night when I was studying, I was motivated by thinking I'd win her back. So that wasn't it. It was just a perfect excuse. When I would blow my account, I would say, oh, well, it's because her. She's already with somebody else. She ain't seen me. I ain't slept with her. She didn't cheat on me again. That's a dead issue. But the human in me wanted to take the fault and place it on something else but me, and my inability to have enough experience to know what I should know. You learn this lesson if you're able to trade with real money long enough. When you get in those painted into a corner type scenarios, like you have nowhere to go and you feel like you're trapped when you're not, just get out of the trade, close it. As soon as you start worrying about the outcome of the trade, as soon as it becomes a worrisome thing and it's a source of anxiety or discomfort physically, and it's manifesting physically, that's the surest sign that you need to get out. Close the trade and don't even go back in the same day, and have no regrets about that. There's nothing wrong with that. You're there to make money. You're not there to win friends and influence people. When the market is not doing something that you wanted or expected it to do, and you're in a trade, you have to make a decision. You're at a crossroads. What do you do? What are you going to do? What is the process that you are always going to go through? First rule, am I physically feeling discomforted by this? Is it physically affecting me? These body symptoms are going to manifest themselves through anxiety. Fear, depression, and anxiety. Those three triggers are going to cause you to have irrational fear, uncontrollable fear, and sometimes fear so gripping and terrifying that you're convinced that you're about to die. Now, how are you going to be able to navigate the marketplace if that happens to you? If you feel that sense of impending doom and any time you're dropping dead, and when you get caught up in that state of panic because the market's not doing what you want it to do, you're going to think irrationally. So you have to have a process that's written out, preferably at your trade desk, in front of you on the wall, laminated. If shit goes upside down, do this. My protocol is this: take something off. Does it subside? If it doesn't, take more off. If it doesn't work, take it down to the smallest position size, which is what I did today. If that doesn't subside it, then you close the trade and have no regrets about it and be done. Who gives a shit if it goes up parabolic or drops, parabolic. Who cares? You have to be balanced. And that sounds crazy coming from me because I'm not chemically balanced. But listen, I know my shit, okay? I know what is going to be the barriers for you. And most of you that keep coming back to me, I know my shit because you have experienced it and you're also experiencing now consistency, profitability. You can find the winning trades. You're making money now. Okay. So I've won you over and I'm increasing that level of understanding by telling you it's not a weakness for you to be able to pull the plug when it's time. Like it's those trading environments, you should have no regrets about euthanizing that trade. Just completely take it out. Pull the plug on it. It's no longer in a position where it can affect you. Walk away from it. How many trades have you seen me execute on just this year? Daily. What if half of them were just me taking some of it off in partials and then pulling the plug and never got to the end result? Would that be losing? No, not at all. I wouldn't feel like that was a losing trader. No one should look at that as a failed mentor or teacher because it's still building the bottom line up. Finding setups, engaging them, and following the logic that would lead to proper trade management. But if you don't have these protocols in place and making room for a process that you don't panic and you need to have it written out. Why written out? Because you're going to look around your room when you're in that moment of panic. You're going to reach for those things that make you feel comfortable. For me, it's a deck of cards. When I start fidgeting, I do shuffling, I fan them, I deal them. Like I deal 21 hands to myself and a hand in front of me and I play 21. I distract myself when I'm feeling that. And if I can't focus on following through on the trade idea, then I have to start taking something off the trade. There's little fidget spinners. I have a couple of them. As soon as you start spinning that thing and you feel like you want to spin it faster than you ever spend it before, it's telling you something. That's a manifestation physically that you're trying to do what? You're trying to exert your will on something other than the market who's right now ignoring you. You want that market to bend to your will. You must bend to its will. And everybody on social media is trying to communicate that they don't ever have that problem. And that is horse shit. That's bullshit. That's why you do not see them consistently. That's why you see them hiding shit, deleting their streams when they lose, not updating their MyFX book. That shit is showing you that they're wrestling with things. They're wrestling with things just like you, just like me, because trading is mental chess with yourself. Are you in a position where you feel like you deserve to be successful? Because much like an abusive relationship does to the abused, they feel like they don't deserve anything but the abuse after having been abused over and over again. You feel like, well, this is the way it is. And you freeze up. And you just want that shiny white knight to come in there and some magical good fairy of good luck comes in there and sprinkles the good dust of good luck on your outcome. And you weather it and you get out by the skin of your teeth. That's not going to happen in trading. There's no Santa Claus. Okay. The best money managers in the world are the one that says, this isn't good, I'm closing it. And that's it. There's no more, they're not regretting it. They're not thinking about it, running scenarios. What if they're done. Next. What's the next one? Next. You have to treat your bad trades or questionable trades that you're in, as soon as they start manifesting physically in you, you have to have a process. It has to be written. It must be visible where you are trading. Another reason why you don't trade on your phone. How are you going to process and work through a protocol that's written out, how are you going to be able to weather, compensate, cope, or euthanize that toxic trade? I told you what mine is. If it doesn't start panning out in a time frame in my mind, once I feel those physical symptoms, I'm disgusted by the fact that this market's not moving to the will of ICT. I'm recording this. It should be doing what I wanted to do. That's what's going on in my head today. I'm watching it. That's what's in my head. So as soon as I feel that, I said, okay, time to put a time limit on it. 2 minutes. This candle or the next, it needs to start showing it to me. It doesn't. Okay, start peeling it off. I got 5 contracts, 1 off. Do I feel any better about it? Nope. All the way down to the smallest one. Now I don't care. I don't care what the outcome is going to be because I've taken as much as I can take off that trade, because if it's not going to go higher and drops from where I got out on my partials and leave 1 contract remaining, who's going to argue and say that was the bad decision to do? Because I got out at the best case scenario I could have with the 4 contracts that I peeled off that weren't going any higher. And if I would have held on to them, it would have been a full stop out on 5 contracts. That's a winning trade. But it didn't go to your 39.45 level, ICT. You were wrong. I had $8,100 or $9,187 of evidence in that demo account that if I did those things any other way, that wouldn't be the case. That wouldn't be the result of it. So you can argue about all the things that don't matter and never grow and improve your mindset about how you're going to endeavor and work yourself through these moments that every trader is going to have for the rest of their career. You're going to have these moments where your trade isn't panning out and you're going to have to wrestle with it. This is the reason why I tell you, don't make the public your partner in trading. Social media is not your partner in your trading business. You need to have a process of making sure that you guard your mind, because this is hard shit, because you are trying to ignore the inevitable temporary failures that this business is going to present to you and everybody in it. You're going to lose. You're going to lose money. You're going to get stopped out. You're going to take a trade and it never gets to any profitability. It's going to just rip right into your stop. You're going to press buy when you really wanted to go in and go short. That's a stupid error, but you're going to do it. You're going to do it. You're going to go into a trade and forget the calendar has something getting ready to come on. Hope it ain't CPI. And as soon as you get in and you realize you did it wrong, get the fuck out. Just don't even worry about arguing about it. Just get out. You have to have a process. And the process is, first rule of this industry, preserve capital. So as soon as you abandon your trade idea and you start taking your attention to worrying about the stop loss getting hit, that is the surest sign that you need to kill the trade. That is the easiest, absolute no-brainer. It wins every time. Get out. I'm going to teach you exactly how to identify that bullshit. And you need to be able to say, I'm not thinking about it. It's just the way it is. It's a process. As soon as I feel that shit, I'm done. I'm out. No more risk. I'm not going to trade the rest of that day. I'll come back tomorrow and see how I feel about it. And you're going to feel good that you've killed that pain. You need to understand that that's seizing control over yourself, your reckless self. And when you get to the point where you see this as a strength, you will not feel like you're abusing yourself or denying yourself success. You're giving yourself the chance that it must be done for you to have a real chance at being successful in this. There's no safety net. None. In that instance, you are losing all control and you're falling into failure. You're falling into it. You could stop at any time, grab a hold of something and preserve yourself from falling into a full stop and regret, because you You will get stopped out. If I don't do something the smallest scale of what I think I should have done, I beat myself up about that. I can't let those things go because I have obsessive compulsive disorder. It's not something that is fixed. You can't fix that. You have to cope with it. You live with it. Can you deal with that? Can you deal with these uncomfortable feelings of you can't control this? The outcome is outside of your control. The market's going to take something from you. Are you going to wrestle with that? Are you going to compensate and put a blind eye to it? Say, oh, I don't see it there. And then fault me or someone else, your spouse, your job, because now you have no excuse. Now you know what you're supposed to do. It's easy. It's easy. Just let go of it. There's plenty of trades out there. And you're going to find by training with me this year, by focusing in on the low resistance liquidity runs, those are the trades that I'm training your eye to see them. They're the little unicorn trades that just, look at the unicorn. You want to go there, you want to pet it, you want to be friends with it. It's inviting. That's how a low resistance liquidity run signature is. It's nice. They're just very, very pleasant to deal with in the marketplace. They're real quick to respond to you, and they get almost instant gratification. And that, to me, is what every trader wants. Contrast that with the donkey from Shrek. Okay. He's cute, but he's a pain in the ass. That's exactly what a high resistance liquidity run signature is. Like, listen, you don't want to be rude. Okay. You tolerate your cousin. You don't want to see him. Okay. But they always find their way at functions. But you're trying to find your way out of the conversations and always being outside their reach. You want to treat the high resistance liquidity run signature trades like that. And as soon as you identify that you fell into a conversation with that cousin, like the high resistance liquidity run signature, and it becomes uncomfortable and you're looking for any opportunity for him to shut up so you can get out of the conversation and say, oh yeah, you're texting your friend, call me right now so that way I can pretend I got to get out of here. Okay. You're looking for any off ramp. That's what you're doing with these types of trades. You're looking for any reason to bail on it. As soon as you recognize you're in a high resistance liquidity run signature, listen, go back and look at the commentary in that video. I knew what I was doing. I knew I even labeled it's high resistance liquidity runs. I'm showing you by contrast. Look at the other trades that I show. When they're low resistance, they're just real quick, sudden, boom, delivered, secured the bag. Easy, over and over and over again. Easy, easy, easy. And then, what the hell's going on? I'm trying to get somewhere and I feel like I'm on a stair climber in the same place, but doing thousands of repetitions, and it just can't climb to my target. That's exactly what a high resistance liquidity run signature is. The market's moving. You can make money. You can make 5 points, but when you're trying to hold on for these big, long 20 handles, 30 handle moves, they can wear you out. If you're in there trying to expect real quick, sudden, big blast off moves, it ain't going to happen. So you have to change your outlook on what you're anticipating in price delivery. You'll feel exactly like you're dialed in, like you're connected with price. And in times where I'm off and I'm out of sync and I get it wrong, you'll see how it gives me indications that, okay, this is not what I should be looking for. Either I move to the sideline and wait for more information, or maybe, not all the time, maybe reverse and go the other direction. And I'll talk about what makes it feasible for me to want to reverse and go against my initial expectation. What changes my mind about that? So whatever happens that price does with us when we're doing our live sessions, you're going to understand more about yourself because you will see, looking at the charts, and when I say what I'm saying about the chart at the time, you're going to have an immediate response internally. I don't see that, or I think it's going to go the other way. And then some of you will be wrestling with me. You think it's going to go this way, or you're going to go that way. You know what? You're revealing to me as a teacher that your strength is being the contrarian trader. So instead of me trying to change him and push him into a specific approach, he's better suited to look for opportunities to be contrary, not so much a contrarian of me, but that's his approach to trading. So if, for instance, like a turtle suit trade, something that a false break above relative equal highs, I believe that that would be a model that would fit his, well, personality and his issues with being taught under me. I can see how that could be turned into an advantageous strength. Whereas his ability to not follow my instructions and go with the bias I've outlined, one could argue, hey, you are being a unruly student. When dealing with them for weeks and months and then seeing it constantly materialize, it was better for him to just identify patterns that fit the criteria that is contrarian. Listen to the videos and watching videos and watching what I do on the charts. Some of you, unfortunately, attribute that as you're doing something. You're doing nothing. You're watching Netflix ICT series, okay? And the series is ending this year. So you want to have an interactive experience. You want to be pushing the boundaries of your comfort zone and deferring all your weekend warrior stuff. Really pull yourself into this. Everything that you're looking for to get you on the right foot, learning how to do this real time, find the setups that make the most sense for you. Some of you might not be able to do the 2022 model. It doesn't make sense to you. Like you want something contrarian. Okay. Well, instead of watching the buy side liquidity get purged and then wait for a shift in market structure, you're waiting for that buy side liquidity pool to be purged, and that's your trade. Folks that are contrarian, that are just looking for the fake entry for breakouts, people that resist, good logic, sound logic, and bias, they are the ones that do the best with turtle soup. Once you learn the skill set, once you learn this, I can't take it back from you. Nobody can take it from you. You can carve out your own living the way the fuck you want to live it. Who cares? I just want to encourage you along the way to live a life that's going to help other people. Show up every day, expect to have to work. And I'm reminding you, when you get in here, even when you do it right and you're in a trade that's profitable, you're going to encounter that time where now it's hard. Do I hold the trade? What do I do? I've already rolled my stop. In that moment is a weird internal argument. It's a weird, it's very stressful. And the sooner you identify it, and the sooner that you adopt the mindset of, I'm not dealing with it, and it's not weakness, it's strength. I'm wasting no more time on this. I'm canceling it. I'm euthanizing the whole trade. It can't take any more money from you. As soon as you kill the trade, you cannot have any more fees and commissions paid on it. You have no more fear about it panning out to a loss, full stop out. You've banked more money than you would have if it goes to your stop. How's that a bad transaction? Please make me understand that that's something that's not worth doing. Convince me that that's not sound logic, because it is. You could be carving out an entirely different outcome for your whole family. Not just you, everybody after you, your children, their children, and so forth. What's going to stop you? What's the thing? Who's the person that's going to say, yeah, this is enough for me to say I'm not going to do it? That's weakness. Not, this isn't making me money. This is too much stress. I'm going to close this losing trade or potential losing trade. That's a strength. That's not a weakness. Most of your opinions about things in this industry are upside down. You think everybody gets rich the first month they go out and start trading. You think everybody has no losing trades, no drawdown. Nobody's ever blown out an account that's profitable and consistent now. There's no way somebody that blew out accounts could find consistency and profitability now when everybody that ever gets there has done that. And the ones that have done it, they don't hide it. It's their badge. That's their war scars. I endured a whole shit ton of stuff to get to the point where I know what I know now. And you don't need to go through all of that. You don't need to do that. It's going to take a lot of work. And it's not going to be easy. You're going to have to put a lot of effort into this. And they all come in, yeah, we want to do it. We're ready. I'm going to do everything. The first month, I got to do what? I'm out of here. Yep. And you got to press into it. When it's uncomfortable, press into that. That's what trading is going to feel like. You do not know if your trade is going to be stopped out. That uncertainty, you have to press into that as a trader. The fact that you're still listening to me, you got what it takes. You have exactly what it takes. My protocol has been for years. First Tuesday of February. That's when I pull the trigger, and that's when I start taking it for what it is, not staying like now. Usually I wouldn't be doing anything in the marketplace at all. And before I started mentoring, the community that I started with 2016 group, I wouldn't even be looking at charts. And that's why I required the first Tuesday of February, allowing January, which can be, sometimes it's a sloppy month where it can be just really just not doing a whole lot. I mean, we're seeing movement, but it's still choppy. It's still shitty markets. And don't let my analysis on Tuesday night with that big ass drop going down to perfect delivery of price convince you that January is a good month all the time. It's not. And then what usually would happen before I started mentoring is it would take me about a week and a half for me to get acclimated to what the market was doing. So even though I would be in there, my trades would be very, very small, one contract, maybe two, and just work in slowly to get a feel for what the market's doing, because I would not be looking at it from the second week of November all the way up to the first Tuesday of February. But because I was mentoring, I always stayed looking at the charts, even though I wasn't actively teaching with the group, because I would take a couple of weeks off, in December going into February. It would be light commentary because I needed to make sure I stayed plugged in. That way and that's all I've been doing with you all. Because some of you are like, dude, why are you sending all these recordings? Why ain't you doing this? I'm keeping myself close to the marketplace. So that way when I go on February 7th, I'm not rusty. Just like a skill set, like anything else, you have to use it. You're learning to do the most difficult shit in the world. This skill set, when you obtain it, and if you listen and you show up every day, you're going to. You're going to. And you're going to spend the rest of your life honing that skill, keeping it, working towards improving yourself, refining it. And nobody can take it away from you. If your spouse leaves you, okay, that's unfortunate, but they can't take this away with you. You're going to have the skill set for as long as you have your mental faculties. And you can change your whole financial landscape. And when you learn how to do this in this environment, when it gets easy, and it will, when, I don't know. But there's going to be easy days and easy months and easy conditions to trade in. And you are going to feel like a freaking monster. Like you can do anything, nothing wrong in those environments. You should be commending yourself that you're even willing to do this in the hardest time it's ever been for trading. It's quick and easy to understand why why the markets are doing what they're doing. They're choppy for a reason because no one with big, deep pockets are participating. It's just us right now, the little guppies moving around. So they don't need to move the market a lot for us. That's all the liquidity and order flow that's coming in. But when they create this next move, what move? You'll know it. It's going to be a shift in market structure that's meaningful. You'll see it. It will be obvious. And that will get everybody thinking, okay, we're off to the races now. And they start allocating funds to positions. Hedge funds start pouring in money. And that is what we're waiting for because they are going to be cannibalized. The markets are not going after retail Rick. Retail Rick just puts himself underneath the tires of the truck. They're going after the deep pockets that's out there in the marketplace. Not every hedge fund is profitable. Some of them are just lunch. But it's going to be requiring a lot of work. You're going to get frustrated many times. You're going to feel like you want to quit. Don't. But you're going to have to listen. If you don't listen, the lessons are going to be much more painful than they need to be. Study. Enjoy your time with your family as well. So make sure you're keeping time for them. Keep your business your business. Don't talk about what you're doing at work or at school or around your friends. If they're not already involved in this, don't invite them. You don't need to be a sales rep for ICT with your friends and family and coworkers. Okay. Keep the focus on you. Build yourself up. Stay busy in your studying. Be safe.